Hello, welcome to the weekly technical analysis review here at XM.com. I'm Selena Nicholas, and today is February 28th. We'll look at the major pairs on the daily chart. So we'll start with EURUSD. We can see that the downside that started from 1.0828 has paused around the 1.05 level. It bounced off this level basically and headed towards another key level, the 1.06. It's being tested right now. It's an important level, acting as a resistance level. It's also where the 50-day moving average lies. So this orange line is the 50-day moving average, providing important resistance to the upside. Short-term direction is unclear for now, since this 50-day moving average is horizontal more or less, and we can see that RSI is not really showing a clear direction. It's just hovering close to the 50-point line. So at this stage, the outlook for EURUSD is unclear, and the pair is expected to stay within the range of 1.05, 1.06 until there is a clear break on either side. Prices would need to clear 1.06 and head towards 1.07 to shift this short-term neutral outlook. Otherwise, below 1.05, we could see a revisit of the low of 1.0339 from back in January. Now let's take a look at dollar yen, also range bound. It's been since mid-January, trading between 111.50 and 115, basically capped by the 50-day moving average. It's been trading below it since mid-January, so it's an important resistance area to the upside. This current lack of direction is also indicated by the RSI and the MACD, both more or less flat. But overall, the bullish market structure is still in place. Market moved off the 100 yen level back. That started back in September. We saw a steady rise up to a high of 118.66 in December. Since then, we saw a bit of a pullback, but it seems there is a consolidation phase now that's going on. The intraday bias is to the downside. There is room to retest this support level at 111.50. But as long as the market remains above this support level, we could say that the bullish outlook is still in play. Let's take a look at pound dollar on the daily chart. It's also neutral, pivoting around the key 1.25 level since around January 24th. There was a sharp pullback from a high of 1.2570 that was reached last week, but support was found at the 50-day moving average. So that's also providing important support around 1.2390 at the moment. The technical outlook is neutral. RSI is flat. It's been this way for the past couple of weeks, just hugging the 50 line. So as long as the market stays below 1.25, there is still some downside pressure, but if prices break above 1.25, this downside pressure would ease somewhat, but a neutral outlook in the short term. Let's take a look at the Australian dollar. So Aussie dollar has moved also into a consolidation phase following its rise from 0.7159 back in December. We reached a high of 0.7740 just last week on Thursday. The low today came, it's been a couple of days, 0.7660 around this level. Prices have been falling to this level, finding support there. So it's an important support level for now. And we're expecting the neutral phase to continue in the short term. The RSI is also indicating this neutral bias for now. Let's take a look at gold. Gold has been clearly in a bullish phase since December. Reached more than 3-month high, about a 3.5-month high yesterday at 1263.74. Tried to pierce the 200-day moving average, but failed to close above this. So it's quite an important resistance level for now, this 200-day moving average. We expect some downside pressure up to 1245. That's an important support level for now. As long as prices are capped at the 200-day moving average, around 1261 right now, this 200-day. If prices can breach this moving average, it could trigger an upside move towards a 1300 level, important psychological level. But because RSI is very close to overbought levels right now, close to 70, there is a possibility for prices to drop back down towards 1245, and then below this we have another important support, 1220, and then 1200 key psychological level comes into view. Anything below this would start to shift the bullish outlook. The 50-day back in January, it provided important support around this level at 1180. The January low is also an important level, and below this we'd see a shift in this bullish market structure. But if prices, at least if they remain above 1200, the current bull trend could continue. Thank you so much for watching. Have a great day.